Hey, what's up, guys? Michael King back here with another video. So today's video I'm going to analyzing the GBPUSD, and this is GBPUSD currently on the monthly time frame. So now, if you look at a monthly time frame right here, let me zoom the chart. What we're having on the monthly time frame is bearish pattern. If you ask me why do I say we're having a bearish market, it's because of the fact that we had a low right on this point right here. It's the point as at this period. But if you look at what is happening currently, you realize that price went way up, then came down, breaking this low. So this break right it made what we're having here currently on GBPUSD and the moment time frame is what made it a bearish market. Now, if you look carefully, what we're having right here is just a pullback, or you can call it a retracement. So now this retracement move you are seeing right here because of the fact that price head towards this level right here, which is what if you ever look up. And by the time you even plot your Fibonacci 2, you realize that that area is also a key area in our Fibonacci 2. That is price trade all the way up to optimal trade entry, which is the mean between the 79% and 62%. So this is like a significant level that should be significant enough to start pushing price to continue a impulsive move to break than this low right here. Now, if we are having that in mind, that overall in GBPUSD and monthly time frame, expecting price to head lower, why do you think price was heading high at this point here? So I'm going to zoom the chart a little bit once more again. Now, if you look carefully, now watch carefully, price was going all the way up to this point right here, and we had this break right here which break this low. If you look carefully, this low was broken, so it means in between the overall impulsive retracement, we also have this kind of minor break of structure right here. You identify that okay, we are having a beginning, or we're establishing the beginning of the continuation pattern for GBPUSD on the monthly time frame. Now this up move right because of the fact that we had a fair value gap right here. So what price happened to do was price was trying to go the way up to fair value gap, and looking at what we're having right here, we might start having a bearish candle to start pushing price what lower. Now that being said, I will move to the weekly time frame so we can take note of the high and the low on the bigger time frame. So on the weekly time frame, what we are having right here is it's still a bearish market, right? But I want to take note of the high and I want to take note of the low. So I'm just going to do is I'm just going to make this line a little bit straight. So I'm going to insert the right figure for it, 1.31570. Okay, yes, we've made this line a little bit straight. Now let's also do the same for the lower line. So 1.20373. Perfect. So now looking at this on the weekly time frame, this is the high, this is the low. But once now I want you to take note of also is the fact that I'm going to go back to the monthly time frame. I want you to also take note of this high right here. Now this fair value gap is valid. I'm just going to draw it a little bit high. So the high right here is 1.2847. Let me make the line a little bit straight. 1.28407. Alright, perfect. So now once I want you to understand is that if this fair value gap is valid, if it is significant enough to push price lower, it means that we don't expect price to go higher than this high right here. That's the principle that you have to understand when it's going to fair value gap. So it means price on no account should price go above this point. So it means price should just trade in below this high right here, and we start seeing a reversal to the downside. So I'm going to take note of this line right here. By the time I go to the weekly, daily, the 4 hour time, and even the hourly time frame, I want to take note of this level right here because it is a level I feel that price should not head above. But if price should head above this line, it means this fair value gap is no longer valid to push price lower. But even above this line, there are still some areas that we can take note of in between this level and this level right here. Levels I feel that they might be significant enough to be a area to start pushing price all the way lower. But that being said, if price break this high and break this high and keep heading higher, it simply means that the bias of this being a bearish market is wrong. and instead price wants to continue a upward pattern. And if price wants to keep heading higher, there's also a possibility that price wants to head to, we still have some areas, significant area right here. By the time we come to the weekly time frame, we have some significant area, right? And also have this fair value gap here. Price haven't traded into it because the high of this candle is at 1.31422. This right here is at 1.31325. So this is price haven't gotten all the way up to this point right here. But even if price gets to this point right here, by the time you look at all these candles here on the weekly time frame, they are likely to still be some fair value gaps that price might likely head towards. So now, that being said, what I want you to understand moving forward is that we're going to move to the weekly time frame right now, and as you can see, this is the high, this is the low, and this is that point I said that price is not expected to go higher than. So if price should go above this level, we also have some areas that we can take it off around this area also, and I'm going to explain that. So now, that being said, looking at what we are having right now, if I should let me try and zoom the charts perfect so it can be a little bit bigger. So now what I want you to understand is that by the time I draw a Fibonacci tool right here, so connect the highs and the low. Now if you look carefully, you realize that what we are having right here is we have the 50% here, 62% here, OTE, and also 79%. Now if price break this high I just mentioned right now, the 79% right here can also be a significant area to push price lower. And beside this 79%, by the time you come to the daily time frame right here, we also have a minor fair value gap right here. So I'm just going to draw the fair value gap. I'm just going to draw the fair value gap right here. You can take note of this fair value gap right here. So I'm going to extend it all the way to where price is currently at. Perfect. So now that fair value gap can also be significant. That is this fair value gap right here. And by the time you go to the 4 hour time frame, there's also another fair value gap. Let me decrease this chart a little bit. Perfect. Also have this fair value gap right here also. This right here can also be an area that price might want to head towards. So I'm just going to draw a shady area so that we can know what we're looking at. Alright, so now that being said, if this fair value gap isn't enough to push price lower, then we can expect price to trade all the way up to this point right here. Right now, so now looking at the weekly time frame right here, I'm going to just delete this fair value gap for a bit so as our charts can be a little bit clearer. Looking at the weekly time frame right now, what we are having is a bearish candle, and what we are seeing right here is a fair value gap. Right? Also a fair value gap here. Now, this fair value gap that we have right here might be an area to push price higher. However, if this area doesn't push price higher and price keep heading lower, that will still be fine because of the fact that we expect a bearish market. But that being said, I'm going to just show you the 1 hour time frame so I can explain better on how do we trade moving forward. So for me to explain that, to show you guys what you should look for this week, I'm just going to quickly show you the way prices are moving right from this period all the way to this period right here. Now if you observe what prices have been doing right here, you will realize that we have this impulsive move, we have a retracement move right here, we had another impulsive move, we had a retracement, impulsive, a retracement, then price went all the way up to this point here, retraced down here, then it went up, then it retraced to all this region right here, went up, then it's retraced right at this point here. So now the moment this low was broken, it made all what we have here, which this upward movement of prices that we have here, this was like a break of structure. So it means right from this period right here, we transition from a bullish market to what, a bearish market. Now if you observe carefully, see our price retraced all the way high but did not take this high, neither did it take this high. Then it traded lower, went all the way up here, then it traded lower, went up to this point here, traded lower, went up to this point right here, but it did not take high. Look at it carefully. You realize that this high does not take over this high, then it broke lower. So it means currently, looking at the hourly time frame, this is our current high. This is our current high right here, and this is our current low right here. Now, when the market is going to be open very soon, because market is going to be open very soon. So once the market is open, what I wanted to take note of is the fact that price might likely want to go a little bit higher. But as long as this high is not broken, we will maintain our bearish bias. But if this high is broken, then we assume that this fair lookout that we have on this weekly time frame is taking action. That is, it wants to probably push price a little bit higher. But if price does not take over this high right here, it means price is still maintaining that bearish bias. That is, price is still maintaining that bearish market. That is, this is still going to be our lower high. So now, if you're looking forward to sell, I will advise you to try and look for any fair lookout you could find. Of course, we have one here, but part of it traded into it. We also have one right here, which part of it traded into. So on Monday, we might have a new fair lookup that we can look forward to sell. Then if you're selling around that fair lookup, then you should understand that you have to also be careful of potential areas that might want to push price up. This is the 4-hour time frame. We have this small fair lookup right here. It might be an area that might want to push price up. Then we also have another area right here, fair lookup right here. There are still some fair lookup, even by the time you go to the 1-hour time frame, there are still some other fair lookup that you have to take note of. For example, this is a fair lookup right here. We also have some around here. We also have some fair lookup around here, somewhere around here. So if you go through the historical price data, you realize that there are still some significant areas that might stand as areas to push price high. So if you are thinking of selling around here, you have to be careful of those areas so you can take some profits ahead of when price gets to those areas, because there could be turning points to hit your stop loss or your break even. But if we have a break of structure, that is, if price breaks high, signifying the fact that that weekly time frame, paper looker that is there is taking action, that is, it wants to push price high, then you have to understand that if you have a break of structure, you have to switch your bias from selling to buy. If price should break this high right here, this lower high right here, you can look for any fair lookout you can find in that impulsive move, that strong move. Those fair lookout that you can find can be an entry point for you to buy this currency pair. So that being said, that will be all for GBPUSD analysis. If you do enjoy, please hit that like button, share to your friends, drop a comment. I will appreciate that, and I'll see you in the next video. Peace.